Hello, my dear students. Today we are going to learn board paper 2017 from the chapter change in profit sharing ratio. So this is our problem. There are four partners like Kapil, Mohit, Roshan and Rakesh, and their profit sharing ratio 5 is to 2 is to 2 is to 1, that is 5 by 10, 2 by 10, 2 by 10, 1 by 10. And their balance sheet as on 1st April 2016 was as follows. The same type of balance sheet. One is Kate as 50,000, workman compensation reserve 50,000. This worker related, like worker can claim for their accidental purposes. So out of this reserve, that can be set up. So here it is 50,000. Let's see how much claim is there in the question. And the internal liability, that is four partners capital. Kapil 3 lakh 50, Mohit 3 lakh, Rashwan 2 lakh 50, Rakesh 2 lakh, total coming 11 lakh. Total of the liability side it is 12 lakh. Now on the asset side, fixed asset and current asset, fixed asset 8 lakh and current asset 4 lakh. So group of asset provided, not individual assets provided. Now let's see the additional information. This is the additional information. From 1st April 2016, partner decided to share the future profit equally. That is, they want to change the profit sharing ratio in 1:1:1:1 ratio. And to change this ratio, it was decided that goodwill of the firm be valued for rupees 72,000. This is entire firm goodwill 72,000, and we already know how we have to deal. That is related to goodwill, gaining partner to sacrificing partner. After that, related to fixed asset, here fixed asset value decreases by 10%. Depreciation purposes maybe decreases. So ultimately fixed asset when value decrease, we know what will be journal entry. It will come on revaluation account, revaluation to that fixed asset. If increase, then asset to revaluation. If decrease, then revaluation to asset. And in case of liability, it is just opposite. When decrease, then liability debit to revaluation, and increase, then revaluation to liabilities. Now one more item, that is claim from worker side. That is worker claim. It will be 70,000. So workman compensation reserve we have to maintain for 70,000. Though in old balance sheet the fund is 50,000. So 20,000 increases. We have to think when like workman compensation claim increases, then the reserve, then that will come on the revaluation account. If claim is less than the reserve, that time unclaimed part generally will transfer to partner's capital account, but here it is claim exceed the reserve, so you have to create new reserve with the help of revaluation account. After that, the capital of the partner will be adjusted on the new ratio. So it will be 1:1:1 ratio, and for this the current account may be opened. Like to make this adjustment, sometimes cash can withdraw. If shortage, then cash can be contributed, but in these cases instead of cash we have to take the help of current account. Which size shortage will put the current account. Now we have to prepare revaluation account, partners capital account and balance sheet. In rough we can pass the journal entry directly if we cannot prepare revaluation account and treatment of goodwill. Then roughly we can pass the journal entry as a rough work. But ultimately this ledger you have to show as per requirement. So in this problem, it is a easy problem. We already solved like previous year question paper. That time we already learned how to open revaluation account, partners capital account, and new balance sheet. So in this problem, in this year problem, first I will explain that related journal entries and remaining part it will be considered as a home assignment. The learner have to complete that part themselves, and they have to submit in like Google assignment section the solution. So first of all, the journal entry. Let's see the journal entry. Revolution account debit to workman compensation claim to fixed asset. So here workman compensation claim, it is exceed by rupees 20,000. It is a liability increase. When liability increase, we know revaluation to liability. So workman compensation claim, it will be credited. Revaluation account debit to workman compensation claim. Fixed asset value, it was 8 lakh and 10% value decreases. So therefore we have to write revaluation account debit to fixed asset, that is 80,000. Only these changes take places to change their profit sharing ratio. So therefore, if you open the revaluation ledger, that will show the loss of revaluation, and that loss you have to distribute it to the partners in their old profit sharing ratio. And this is the loss distribution entry. It is all partners capital account debit, Kapil capital account debit, Mohit capital account debit, Roshan capital account debit, Rakesh capital account debit to revaluation, total 1 lakh, and in the ratio 5:2:2:1, always old ratio, not new. Now after that, this is the treatment related to goodwill treatment. So before passing the entry, we should calculate sacrificing ratio as well as gaining ratio. So for this is the working. If the partners are there are 4 partners. This is the old ratio, 5:2:2:1, that is 5/10 Kapil, 2/10 Mahit, 2/10 Roshan, and 1/10 Rakesh. New ratio, it is provided 1:1:1:1, that is 1/4, 1/4, 1/4, 1/4. Now as per formula, that is sacrificing ratio equals to OR minus, it will be NR, OR minus NR. So here it is 5/10 minus 1/4. If you show here, so it will come the positive value, like 5/20 minus here, if you multiply, so here 10/20 minus 5/20, so it is coming 5/20. And the rough work we can do also to calculate this. LCM will be 20, afterward here divided 4, so it is coming here 5, here in this case is 2 into 5, 10 minus 5, so 5/20. That's easy calculation, everyone can do. Now next one, so in this cases OR is greater than the NR, so therefore this partner like Kapil has sacrifices, and the sacrifice amount, it is 5/20. But in this cases Mohit, OR and NR, if you compare here, so NR in this cases is greater than the OR, so therefore instead of sacrifice, Mohit has gained 2/10 minus 1/4, it is coming minus 1/20. Roshan also same, 2/10 minus 1/4, it is coming minus 1/20, and Rakesh 1/10 minus 1/4, it is coming minus 3/20. So this is simple calculation, everyone knows, and everyone, I think, able to calculate this simple ratio. So here you can see here the 3 partner has gain here, Mohit, Roshan, and Rakesh, and total gain 1/20, 1/20, and 3/20 coming here 5/20. So total gain always it will be equals to total sacrifice. Total sacrifice 5/20 and total gain also 5/20. Now here total farm value of goodwill, it was 72,000. Now out of that, the Kapil share is coming 72 into 5/10, that is 18,000. Mohit will share is coming 3,600. Roshan also same 3,600, and Rakesh is 10,800. And you know the treatment of goodwill purposes, the entry will be here gaining partners to sacrificing. So ultimately Mohit capital account debit by rupees 3600, Roshan capital account debit 3600, Rakesh capital account debit 10,800 to Kapil capital. So these 3 partner as again, so we have to debit their capital, and the sacrificing partners capital would be credited. Ultimately total total debit equals to total credit, it is coming here. So like that way we can pass the journal entry. The remaining part is don't have to do. Now we are going next subsequent one more year board paper, that is 2020. Here one simple problem came, that is 4 marks question. Here also 3 partner and the ratio 5:3:2. On 1st April 2019, they decided to change their profit sharing ratio in 2:5:3. This is the changes. And on the date, the balance sheet shows the debit balance of 50,000 in the profit and loss account. So this debit balance of profit and loss account, several times I told when any debit balance is there, so that will shown on the asset side. So ultimately it is undistributed loss. If credit balance, then it is undistributed profit. And profit, then simple way that undistributed profit account debit to old partners capital account or partners capital under old ratio. So when loss, it will be just reverse entry. So there is one losses is there in their old balance sheet at the time of change of profit sharing ratio. Now one more balance is shown, that is IFF, full form, that is investment fluctuation fund, that is 40,000. This is related to investment purposes, investment value increase decrease, that will adjust here. So here that is already fund, it is created against investment purposes, 40,000. So there are two balances shows, and we have to show the adjustment entry at the time of change in profit sharing ratio. At the same time, goodwill value also shown, that is 30,000. The same way, farm value of goodwill, if it is provided, then it is our first duty to find out sacrificing and gaining ratio from these two ratio, OR as well as NR. From these two ratio, we have to find out that which partner has sacrifices and which partner has gain. If this goodwill value not provided in the question, so no need to find out sacrificing and gaining ratio. But when goodwill value provided, we have to remember that we have to do no other alternative entry is there in this chapter. Only this is the entry you have to remember, that is sacrificing and gaining partners capital account debit to sacrificing. So for this working is required. And another adjustment here, investment book value, it was 5 lakh, but revalue at that time of change in the profit sharing ratio 4,80,000. So here if you compare here, book value 5 lakh, but revalue figure it is 4,80,000. This 20,000 value decreases. Suppose if this fund is not there, so generally what we'll do, we'll take the help of revaluation account. Ultimately revaluation account debit to investment 20,000, that entity is enough. But as it is a fund is there, so first of all we have to utilize the fund. Fund is sufficient, fund is there, 40,000 is there, only 20,000 decreases. So if you adjust 20,000, more 20,000 being left, and that 20,000 we can distribute to the partner's capital account. Let's see the solution here. This is the first one, that is undistributed loss. Already told, when it is a loss, undistributed loss, that time partner's capital account will be debited. So therefore the three partner S capital account debit, S capital account debit, this capital account debit, or shortly you can write S capital, S account, A's account, D's account to profit and loss account 50,000, and that is the old ratio. Under old ratio that will be distributed. Now that one, that is investment fluctuation fund purposes, this entity, that is 40,000. Total fund is there. Out of that 20,000 investment value decreases, so 20,000 it will be adjusted with the investment, and remaining 20,000 it will be distributed among the partners in their old profit sharing ratio. So therefore to S account, to A's account, to D's account, and in their old ratio it is coming 10,000, 6,000 and 4,000. Now after that, that is statement of goodwill purposes, we are calculating SRGR. This is the old ratio, 5/10, 3/10, and this one also, that is 2/10. Now this is the new ratio, 2/10 minus 5/10 minus 3/10. So over minus NR, it is coming 3 by 10. The first partner has sacrificed. Second partner has gain, that is 2 by 10, and third partner also gain, it is 1 by 10. And total gain, we can see here 2 by 10 plus 1 by 10, it is coming 3 by 10. Total gain equals to total sacrifice. So on that basis, the total value of goodwill, it is 3 lakhs, that is firm value. So 3 lakhs into 3 by 10, it is coming 90,000. So therefore to S account 90,000. Again 3 lakh into 2 by 10, it is coming 60,000. So S account debited by 60,000. And last one 3 lakh by into 1 by 10, it is coming 30,000. So therefore this shares will be debited 30,000. Ultimately this is the gaining partner. These two are gaining partner, and this one the sacrificing partner. Gaining partner's capital account debit, S capital account debit, S capital account debit to S capital account 60, 30, 90. So this is the solution for the year 2020. That is the last year question came from this chapter, and it is just one question, just investment fluctuation fund related to that topic. These two terms are very much important, that is investment fluctuation fund as well as workman compensation claim. We have to remember separate video I made related to that two topic also. So that video can be watched. The study material also can see in details. Okay, I'm going to conclude this video. Thank you and study well.